What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today's episode is going to be your daily stock market technical analysis update. We saw some selling in the stock market today, and the question is the stock market correction finally here, or is there still more upside in this market before the stock market goes through a correction? First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. Alright, so with today's price action on the S&P 500 SPY ETF, we did go down negative 0.76%, but it's to be expected to get a little bit of cool off after last week's bullish price action, where, like I said on Friday's episode, we got two closes over that upper Bollinger Band, so it's completely normal to see the price action retrace back inside the Bollinger Bands. So if you ask me, this sell-off was 100% technical sell-off, so there's really no reason to panic. The price action is still over the 5 EMA, and the bullish trend is still very strong, with all of these moving averages still strongly trending to the bull side. You can't look at this chart and see anything other than bullish. So my price target on the S&P 500 for the time being is still up here at $393. Now that we have broken and closed above my first price target for 3 days in a row, it only solidifies that this price action is the real deal, and we're likely going to continue to head higher. The longer we spend getting price action over a resistance level, the stronger that level could act as support. So you can also see that the 5 EMA is also now crossing over that price target at 377. So the SPY ETF could still find support around this 377 level. And even if we did start dipping all the way down to the 20 simple moving average at 371, we could still find support and start bouncing and heading higher into a continuation of the bullish trend. So like I always say in this market, do not try to call a top. The price action and the trend are telling us that the market is likely to continue to head higher. Going against the trend and going against the price action is the best way to lose money. Do not try to short just because you're feeling bearish. Let the price action and the trend tell us when it's here, and let's not make any assumptions and no guessing. Another thing to note about today's price action is while we did go down negative 0.67%, it was on very low volume. So there's no signs that there's big money dumping positions when the volume is that low on a red day. So I really see no reasons to panic. As I always say on the Stocks channel Discord, do not panic sell. And do not sell at support levels. So right now, there's no reason to panic, and there's no reason to sound the alarm that the stock market correction is here. Just be patient and wait it out, and we're likely still got plenty of upside left in this market. If we do get up to my price target up here at 393 from today's close, that's still about 4% upside left in this market before we could find another resistance level. Remember, the S&P 500 is trading at brand new all-time highs, so there's really not that much resistance above these levels. Think about this as an empty air gap, and there's really no price discovery and there's no resistance levels in that area. As you can tell from my price targets, the next level of resistance is my next price target up here at $393. Of course, we could find resistance at the previous all-time high, which is right around 381. So go ahead and watch that level as resistance as well. Next up is the Nasdaq 100 QQQ ETF, and we see the Nasdaq going down negative 1.45% and closing right above the 5 EMA. You can also see, like I said with the S&P 500, that the selling was on relatively low volume, which really tells us that there's no reason to panic. The price action is still bullish over the 5 EMA, and we still have a bullish trend with all of the moving averages still stacked to the bullish side. So my price target on the Nasdaq 100 QQQ ETF is still up here at $321. Just like with the S&P 500, today's price action is completely just normal cooling off after we did get that Friday close over the Bollinger Band. It's completely normal to retrace and close back inside the Bollinger Bands after we get too far extended. That's called going too far too fast, and it's not sustainable. Next up is the Dow Jones DIA ETF, and we saw the Dow Jones going down only negative 0.28% today, and the price action closing back above that 5 EMA still. Just like with the other indices, we were closing above the Bollinger Bands, and now we're back inside and ready to start trending higher. The price action and the trend are bullish, and our price target is still up here at $312, which has yet to be met. So all three indices still have bullish price action and bullish trending, and we still have upside outstanding price targets that have not been met yet. So there's still more upside in this market, and the bullish trend and price action are telling us that we're likely going to start heading higher towards those targets. Next up is the ARKK ETF, and we saw the ARKK ETF going down negative 2.99%, and we're still closing over the 5 EMA with a bullish trend. Now, like I always say with the ARK ETFs, there's definitely a lot of risk in these ETFs, but as long as the price action and the trend are bullish, you can stay in these ETFs for as long as you want. Wait for the price action and trend to tell you when to get out. And right now for the ARK ETFs, you're looking for another price target up here at $144. We're likely to break 144 and head to 149 very soon. So that would be the two price targets I would be watching on the ARKK ETF. If the price action did start closing back below the moving averages and this trend started to reverse, that would be your signal to get out and be ready for the stock market correction. It's obviously not here yet because the price action and the trends are telling us there's more upside coming. Next up is the VIX, which is our fear indicator, and we saw the VIX going up over 11% today, but it did find resistance right at our resistance level at 24.8. So while the VIX did spike today, that's completely normal when the S&P 500 is selling off. Now, as long as the VIX can keep a lid on it and not close back above 24.8, we're likely not going to see a ton of volatility back in this market. In general, I would expect to see the year 2021 have a relatively elevated VIX level, which is not necessarily a bad thing, and it's only a good thing for traders who need more volatility to get better trades. So as long as the VIX is below 24.8, I wouldn't worry about a ton of volatility. And if we start closing back above that level, we will need to watch the VIX to see if it's signaling a big sell-off coming. But more than likely, we'll see the VIX continue to head lower back towards support at 20 as the stock market continues to trend higher. Next up is the US dollar, and the US dollar had a lot to do with today's volatile sell-off. We saw the dollar going up quite a bit today, and we did get to a point on the US dollar where we were testing resistance and trying to form a daily higher high. As you can tell from this chart, the dollar did get rejected at resistance, and we have yet to see a daily higher high form on the US dollar. You can see the trend is trying to reverse, and it is trying to go into a short-term bull trend. The price action is also over the 20 simple moving average. So are we seeing signs that the dollar is trying to reverse this bearish trend? Absolutely. But it has not reversed the trend until we see the price action form a daily higher high, and we would also need to see confirmation in the trend to go back to the bull side. So typically speaking, a weak dollar would have been a strong stock market, but as the dollar bounces, we could expect to see some selling in equities like stocks, which could expedite the stock market correction. So it's going to be very important to keep an eye on the US dollar at these levels, but right now we're still trading way below the 50 EMA, and we still have a bear trend in the medium and long term. The short-term bear trend does look to be reversing, but if the dollar does continue back down towards support as soon as tomorrow, that bear trend will continue, and we're likely going to see the US dollar back down here at $89. So we need to keep a close eye on the US dollar because it is telling us a lot of information at these levels. Next up is gold, and we saw gold have another very volatile day, and we did test support level back at 1826 yet again, and that support level did successfully hold up, and we did close much higher for the day. So typically gold does sell off for 3 to 4 days at a time, and you can see back here after the sell-off we typically get a nice little bit of a bull run. So is it time for gold to start heading back higher? It could be. We do have daily higher highs and daily higher lows, and we also have a medium-term bull trend because that 20 simple moving average is trading over the 50 EMA. But in the short term, things are definitely looking bearish on gold because we do have bearish trending in the short term, and all of the price action is closing below all of the moving averages. So you can't look at the price action and see bullishness, but if you look at the grand scheme of this chart, we still have the benefit of higher lows and higher highs. So gold's price action will be very critical to watch in these next few days to see if we can start bouncing from this support level that we're forming and start getting back over that 20 simple moving average. So as far as price targets, watch 1887 and 1930 as possible price targets in the very near future. Next up is silver, and it's very similar to gold. We're closing below all of the moving averages on the price action, and we are getting some short-term bearish trending building up. However, the 20 simple moving average is way above the 50 EMA, which means the medium trend is still bullish and the long-term trend is still relatively bullish as well. So on silver, we would need to see the price action come back up and close over 26, which is the 20 simple moving average, and then we would start seeing some bullish price action to go with this bullish trending. So the price targets I have on silver are still up here at 26.56 and all the way up here at $28. So it looks like gold and silver do need to start bouncing very soon to maintain their bullish trends. Right now the price action is bearish, but we still do have the benefit of higher highs and higher lows, which is always the signs of a bull market. Next up is Bitcoin, and if you've been following Bitcoin, it's been a very wild ride, and we did see Bitcoin come all the way back down to $30,000. You can see that the Bitcoin dip is not holding up, and we're currently bouncing and looks like we're about to close over this 13 EMA at $34,700. So if you've been trying to get into Bitcoin, you want to try to buy in on these dips and slowly accumulate over time. I'm still bullish on Bitcoin for 2021, but it could still drop quite a bit before we start to see it bounce for real. So on Bitcoin, be prepared for it to come down to any of these levels between $22,000 and $27,000 before it does find a temporary bottom. But don't be surprised if Bitcoin comes all the way back down to $18,000 either. So like I said with Bitcoin, it's very speculative and it's very risky. So if you don't have the stomach for volatile investments, then Bitcoin is not for you. Also keep it in mind that you want to keep Bitcoin's position somewhere between 5 and 10% because it is so risky. You don't want to have too much money on something this speculative and volatile. So did we find the bottom on Bitcoin before we resume higher? Only time will tell. But as long as we're holding up in this bullish trend with all of these moving averages trending strongly to the bull side, it's very possible for Bitcoin to continue to trend higher. Don't forget my price target is up here at $42,700 and we have yet to hit that. We got within $700 but didn't quite get there yet, and that could still be the level that Bitcoin is trying to get to before we see the real correction. Next up is Amazon stock, and we still see Amazon looking very bearish today because we're still getting price action closes below all of the moving averages, and we're starting to see the bearish trend picking up momentum. So the moving averages are starting to trend to the bear side and the price action continues to head lower. And you can see with today's close going down over -2%, we did form a lower low compared to this low that we had here. So Amazon's not looking good, and I really can't suggest buying Amazon until we see some bullish price action forming on this chart. Next up is Apple stock, and we see Apple stock going down -2.32% today and closing back below that 20 simple moving average. However, Apple still does have the benefit of bullish trending, so this could be fixed as soon as tomorrow if the price action can start bouncing from here. So looking at this chart, it's really not that bad, and it still looks like we're cooling off ever since we hit my price target at $136, which is completely normal. So Apple stock looks like it could be bouncing from these levels very soon, but it could also be heading down into a bear trend. So it's really at a confluence area where it's hanging out right around $129, trying to decide if it wants to continue to go higher or lower. So watch to see if Apple can close back above that 20 simple moving average, and if it does, it means it is likely going to head back up to $136. If Apple does break and close over 136, it's likely heading to $141. But if it keeps closing below the 20 simple moving average, it's likely heading back to the 50 EMA at $124. So keep a close eye on resistance and support levels for Apple, because it is trading right in the middle between support and resistance, and it could really go either way at these levels. When the price action is being neutral like this, you go with the trend, and the trend is still bullish. So if I had to favor odds for Apple to go higher or lower, I would favor Apple to head towards $136 in the very near future. On the financial sector, we're seeing bullish price action and still seeing bullish trending. On the industrial sector, we're still getting bullish price action and bullish trending as well. And on the healthcare sector, we're still seeing bullish price action and very strong bullish trending. So going back to the S&P 500, we see 3 of the 4 sectors looking bullish except for the tech sector. As we've seen numerous times, the tech sector very rarely stays down. It's going to be bouncing in the very near future, which should send the S&P 500 up much higher. You can see financials, industrials, and healthcare sector have bullish price action and bullish trending, which means the S&P 500 is likely just going to continue to head higher. It's very likely the VIX is finding resistance and the fear is going to start leaving this market yet again, and it's also possible the dollar is finding resistance and it's going to start heading lower. So low fear and a weak dollar and strong bullish sectors means this market still has more upside, and the correction is not likely in the market just yet. So continue to be disciplined and continue to hold cash positions just in case the market decides to sell off. You won't be caught in a bad position where you have no cash to buy lower. If you're looking for a profitable and disciplined trading community, come check us out at the Stocks Channel Discord. You can find out how to join by clicking on the link in the description of this video. Remember, panic selling is not a strategy. So if you're getting nervous the higher the market goes, it's completely normal emotions, but look at the trend and look at the price action and try to stay objective. If you're getting nervous and you're getting scared, just go to cash and wait it out. Just remember, if you sell your positions, don't buy back in later at the top and then wonder why you're losing money when the stock market corrects. If you're going to sell, be patient and stay in cash until the correction is over. If the correction doesn't come for another month or two, don't get impatient and FOMO in at the top. So next up, let's take a look at the Stocks Channel Hot Stocks. Alright, so our first hot stock of the night is going to be Tesla stock, and we did see Tesla having a big sell-off today, going down negative 7.82%. However, I don't think this is the end for Tesla, and I do think Tesla is ready to start heading back higher. So on Tesla, we can see bullish price action closing over the 5 EMA, and we still have the benefit of this really strong bullish trend. And like I said before, when a stock goes too far too fast, it typically retraces and closes back inside the Bollinger Bands. So on Friday, we saw Tesla looking really greedy and way up there in the clouds, and it was way outside the upper Bollinger Band. And today we saw it pay for that, and we did see it come all the way back to the 5 EMA. So now that Tesla has cooled off, I do think that it can come back up and run up to my next price target at $903. Remember, I do have Tesla finishing a fifth wave, which means there is a lot of downside risk once we finally find the top in Tesla stock. So if you're not in this stock, I can't suggest chasing it, but if you're still in the stock, really can't suggest selling it either. So wait it out, and it's going to be a really wild ride on the way up to $903. Look for a strong resistance at that level, and we could start to see a top in Tesla soon. Next up is NIO stock, and like we saw with Tesla stock, we see NIO going way too far, way too fast, and it's closing way outside the upper Bollinger Band. So on NIO stock, I would not be surprised in the least to see NIO stock come all the way back to $59 or even possibly $55 before finding support. Remember, we got into NIO stock way down here in the low 40s, and my price targets were $52 and $61, and today we closed up here at $62.70. So we've definitely exceeded my upside price targets, which is great news for all of you NIO bulls, especially for those of you that bought when I suggested it down in the low 40s. But like I said, when you go too far too fast, don't get greedy and don't be afraid to lock in those profits. It's still possible that NIO stock has more upside, and as you can tell now that we've hit $67, we could continue to head higher towards the next price target up here at $70. So we're definitely getting up there in the clouds, and NIO stock could definitely go through a doozy of a correction when the correction finally does come. So be very careful with these high-flying stocks as we get closer and closer to a possible stock market correction. Next up is Palantir stock, and we still see Palantir closing below that 20 simple moving average, but we are getting some positive price action closes over the 5 EMA. You can see the trend does look like it's trying to reverse and go into a bullish trend. So if Palantir can close over the 20 simple moving average and go into a bullish trend, this could be a great stock to own. However, because the trend is still bearish and the price action is still below the 20 simple moving average, I still think there's a strong possibility that we see Palantir stock come down to the $21 support level. You can also see the 50 EMA is at that same exact support level now, so we would have two support levels down around that $21 level. However, it's also fully possible support level is now $25 and Palantir is ready to start heading higher. So I'm going to remain bearish on Palantir stock in the short term until proven otherwise and until we get a price action close over that 20 simple moving average. Next up is Alibaba stock, and we saw Alibaba stock going down negative 3.73% today, and it's still kind of hanging around this support level right around $227. I still think it's fully possible for Alibaba stock to come back to support at $224 before bouncing and trying to break out of this consolidation. I'm still very bullish on Alibaba stock, and I still think Alibaba stock is going to hit my price target at $255 in the very near future. So continue to try to slowly accumulate Alibaba off support levels, and just in case we do break below 24, there is another support level down here at 216. Next up is a brand new hot stock that I'm bringing to you, and it's called Zoom Video Communications, ticker symbol ZM. So Zoom is one of those hot stocks that if you followed me on my NIO buy recommendation or my Splunk buy recommendation or my Teladoc recommendation, I would put Zoom in that same category. Zoom has a lot of potential upside in this stock, and I'm giving you this hot stock at the ground level. So Zoom is a buy off of the support level at 337, and we could come all the way back down to 325 before we start bouncing, but I would only buy more at 325. So I do think Zoom is a buy at 337, and I would only want to buy more if Zoom gets down to 325. My price targets on Zoom are at $380, and if we break and close over 380, we're likely going to get to $418 in a flash. So I'm very bullish on Zoom, and it is a brand new hot stock that I'm bringing to you for the first time tonight. So if you're interested in more hot stocks at the ground level, consider joining the Stocks Channel Discord, where I give brand new hot stocks daily to all of my Discord members. You can find out how to join by clicking the link in the description of the video. So remember, a stock market correction could be just around the corner, and it's very important to be a disciplined trader at these times and make sure that you have a cash position at all times. You don't want to be 100% in the market when it starts to correct with no cash. So good luck out there, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.